So as I started to learn more, I would put regular amounts also on top of what I initially placed. And that also is very consistent to what I'm saying right now, that it's all about building a base, it's all about stacking, it's all about creating volume. And I somehow fell in love with Warren Buffett and his principles, and I would read a lot of his ideologies and his philosophies as well. As I studied Warren Buffett, the way he would analyze was somewhat simple. From the last video, I mentioned already that I got into investing because I wanted to somehow gain and earn from the money that was parked in the bank that came from the proceeds of the side hustles that I actually had. I started to study. I wasn't keen on the stock market, but I met someone who talked to me about mutual funds, and when I was starting out, they would normally talk about mutual funds as a normal middle class product. And because I read a lot of Robert Kiyosaki, I realized I want to be in the upper portion of the stratosphere, something like that. So I realized, okay, if I put it in mutual funds, I would have fund managers that would invest the money on my behalf. If what I put there is something that I will leave for the very, very long term, and I really had no idea also what business to start yet back then it would have been, I think, a good proposition. The way I looked at it also for the long term and the stats that they showed, historically it gave me something that was very, very good. But I'm actually describing a balanced fund, mutual fund. That one is basically you have fund managers investing your money in stocks and bonds. And if they believe that the stock market will perform, then they're going to be heavy on stocks. Or if they believe the bond market will perform, they will shift their position from the stock market to the bond market. And from what I studied at that time, what I knew was they were inversely proportional, meaning if the stock market was more attractive, they would put the money from bonds into stocks because they were inversely proportional. And in a way, also from a risk perspective, the stock market was more volatile, it had a higher amount of risk. The bond market was less volatile and had a lower amount of risk, and they could have balanced it. That was just my frame of mind at that time, that I was investing for the long term. I didn't know what to do with the money yet. I knew that there were fund managers at that time who were smarter than me, who knew already where to put it, and that I was somehow hedging because I could have mixed it with stocks and bonds, and it wasn't me also trying to pick or select to how it could actually go or where to actually put it or how I could actually allocate it as well. It became something that was complementing because at that time I had a job, and in the same way also I was focusing on building whatever side hustles I could get, or finally building what business I could actually want. I've built an asset that if it's an asset, it's something that will just work hard for me, even if I was focusing on my job, focusing on learning what business that I could actually want. And that's why I encourage people to start learning about investments, because when you start learning about it, get interested and you try to learn more, especially because you have skill in the game and because also you have money already placed in it. And so as I started to learn more, I would put regular amounts also on top of what I initially placed. And that also is very consistent to what I'm saying right now, that it's all about building a base, it's all about stacking, it's all about creating volume. And I somehow fell in love with Warren Buffett and his principles, and I would read a lot of his ideologies and his philosophies as well. As I studied Warren Buffett, the way he would analyze was somewhat simple. It's very, very close from looking at the stock market as the way you would look at a business. And one of the things that he would mention about, especially for Coca-Cola, are so fascinating up until today. And please do notice, one of the things why I love also Coca-Cola as a business and as a stock is because Coca-Cola trades on brand. People buy Coke because it's Coke. Even if you do a test also, people who are blindfolded would think that Pepsi is actually Coke or Coke is actually Pepsi because they're somewhat the same in taste. But people buy Coke because it's Coke. People buy Coke because of the brand that's attached to it. He wouldn't know how technology would be for the next decade, but he would know that people would still drink Coke. So it's part of how people live, and that's what makes Coke a very, very good business, because of its brand and the margins that they have also. Please do note it's water, sugar with color. That's what Coke basically is. I fell in love with Warren Buffett's principles, but above and beyond that, he had a balanced fund already. I was watching the stock market and it came to a point that I would watch it on a regular basis. If I'm watching it every day and I'm spending a lot of time to learn more about it, then I start trying to learn more about also the stocks that are in the mutual funds as well. Then why not do it on my own? At least also I have the ability to be able to buy the ones that I actually like. So that's what I did. I didn't withdraw my mutual funds. I didn't take out what I had in the balance fund, but whatever I had, whenever I had extra, that's what I would put to invest in the stock market. So what led me to the stock market was me pursuing business, which was from dreams that I had. But because I had extra money, I wanted to invest it. And because I wanted to invest it, I ended up in mutual funds. I was thinking, why not learn some more? I realized that why not try stocks? And then the 2008 crash happened. I was heavily influenced by Warren Buffett. It was a very, very opportune time for me. A lot of those companies, from Ayala Land, Jollibee, Universal Robina Corporation, were very, very good companies, which their stock prices dropped. And what's interesting about that, the recession in 2008 wasn't in the Philippines, it was the States. The companies in the Philippines were very, very good. Prices just went down because everyone was scared about what was happening in the States. It's been more than 15 years of me in the market. I didn't plan for it. It was something I stumbled into. It was something that I got into, and that's what I want to suggest to you. The entire lesson for all of this is keep trying to learn from experience, to put something based on what you understand the most, and to keep on adding little by little. Because when I started also, I didn't put a lot, but the more I understood it, the more I started to add into it. The more I tried to build my base, the more I tried also to allocate more based on my level of understanding. Starting early was one of the best things that happened to me. It's not just about buying low, it's also about having the ability to have what you have compound for you. And as what I always say, time is the greatest arbitrage when it comes to investing. But above and beyond time being the greatest arbitrage when you start investing, it's also knowing what investments, what assets would actually work for me that I could actually double down on. By the way, this is Grada Familiar right here to the side. But it's not just about risk and reward, it's not just about experience, but it's also about allocating more on the things that you know, allocating more on the things that you have a lot of information on that you know you can do very, very well on it. So I hope that this encouraged you. I hope that this inspired you. I hope that this was something that added value to you. I do hope that it's something that will help you also pursue whatever investments that you want to enter in. And it doesn't have to be the same as what I tried or what I entered into, but you always pursue what makes sense to you, but you always pursue what you like and what you love, and that you will never stop doing. So I hope you guys got a lot from this. I hope that this was something that was insightful and that you guys learned from this, and this was something that helped you, because at the end of the day, the reason why I make videos like this is just to give you so much value, to help you, to encourage you, to inspire you, and hopefully that you guys invest as much as you can also, because I really believe that investing is a game, and it's one of the best things you could ever do over and over again. So I hope that this was something that helped you. This is marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.